Welcome to the Property Couch, where each week you get to listen to two of Australia's leading experts. Bryce Holdaway, co-host of Location Australia on Foxtel's Lifestyle Channel, co-host of Escape from the City on the ABC, and partner of Empower Wealth Advisory. Ben Kingsley, chair of Property Investors Council of Australia and the founder of Empower Wealth Advisory, named the 2018 and 2019 Property Advisory Firm of the Year. Stay tuned as they bring you the insider's guide to property, finance and money management.
All right, folks, welcome back to the Property Couch. Hello, Ben.
G'day, mate. How are you?
I'm good, thank you.
World's a bit different since the week before, isn't it?
Yeah, you might not have noticed, Ben, but there's a virus that's spreading all around the globe to every corner, and I'm not talking about the coronavirus. I'm talking about the hysteria involved with it.
Yeah.
It is certainly an interesting time, isn't it?
It is.
Folks, we did a special last week, so if you haven't listened to that, circle back to that. We are also going to talk about it next week, Ben.
Yeah, a little teaser if I can, Bryce,
Yep.
because obviously we've got big announcements coming out. We've got a lot to digest. We're going to see how the markets roll out for the rest of the week. But we're going to have a focus on the property market next week. And just a little teaser, just have a look at, I'm just going to say what happened after the 87 crash with property.
What happened, Ben?
Not telling you.
Okay.
What happened after the GFC with property,
What
Bryce?
happened, Ben?
I'm not telling you. Anyway, there just might be a flight towards safety. That's all I'll say.
All right.
Anyway, but we'll have a deep dive into that next week.
And also parking assets in this country is a flight to safety from a global level as well.
Correct. That's exactly right. So there's plenty to talk about. So we're obviously measuring demand indicators. So we'll have more of that over the course of this weekend. So we're crunching the data, so we want to share a bit of that with you as well for next week. So a real focus on where we think residential property will go in terms of, and it is a moving story, so there's lots of unknowns. But at this point, today, I'm excited about today.
Unknown unknowns.
Unknown unknowns. We've got known knowns, known unknowns, and unknown unknowns. Unknowns. Yep,
Well, that's going all right until you stumbled at the end. All right, folks, so today is episode 275. Back in 273, we talked about the build-up, how we found our voice on the podcast, and it had all been conspiring over the last 5 years to give out a bunch of frameworks to all of our community so that they can use those frameworks to make better decisions. Now, on that, Ben,
yes.
I've got to tell you, I was at my local football ground,
Yes.
Where I live down on the Surf Coast, Ben.
Yes.
And apologies in advance if I butcher this, but I think it was Tom. Tom comes up to me and he said, "G'day, Bryce, how you going?" And I get a few of those, Ben, as you do. And he goes, "I just wanted to thank you for everything you've done on the podcast."
Oh,
so it was awesome, right?
Nice.
And
so it's just a stranger. Effectively, yeah.
Yes.
Yep.
Actually happened twice. Once on Sunday too, someone just yelled out, and I didn't know who it was. I was with my wife. And so basically he said, Tom said to me, "Listen, I live in Torquay like you do. Because of listening to what you guys talk about on the podcast, I bought a house in Belmont, and the one across the road has actually gone up about $100,000 from what I paid for it."
Lovely.
Got to tell you, we'll never ever get sick of hearing stories like
we
that.
love it.
It is so good. And hopefully that's because of the frameworks that we've tried to digest through our last 5 years. So Iris will put a link in the show notes, but we've got a PDF, Ben, that you can download that is really summarising all of the frameworks that we talked about
summary
in episode
That's
273.
Yep.
You got to get that. So it's free. It's got some links to help you with more resources,
It'll
shows you all
always
those
be
main
free.
frameworks. And there's a really great picture, and I've got to shout out to Stig. She drew some scribbles, and those scribbles are really good because it actually helps people piece it together
Beautiful.
on how the frameworks work together. So go and check that out, folks. So I want to talk to you today about my Mindset Minute theme, Ben.
Sure.
And it's largely around what we were sort of talking about last week.
Yep.
People don't make good decisions when they are either drunk, tired, and or panicked.
Correct.
Okay, so it's important to understand that you don't need to make decisions under those three circumstances. And I was listening to some of the American commentary around what the virus is doing to the markets over there.
Yep.
Dave Ramsey, he was talking about no one gets hurt on a roller coaster except those who jump off in the middle of the ride. So ride it out. And he quoted the Dow was at 13,000 just before the GFC. It dropped to 6.5. But if you had have not sold, because he quoted Warren Buffett saying, "How much did you lose in the market today?" He goes, "Well, I didn't lose anything because I didn't sell anything, right?"
Yeah.
So if I hold
Paper loss.
From that $6,500 low at the GFC, it went to just before the coronavirus, 30,000. So that was a 5x return on the bottom of the market of the GFC in 12 years.
Phenomenal.
And in the ASX, Ben, we were talking before we pushed record.
Yeah, I mean, the data suggests that since the Australian Stock Exchange has been open around the early 1900s, that your compounding return per annum with your capital growth and also the dividends that have been paid is around sort of 10%, right? So it just goes to show you that if you stay in the market long term, now remembering you're still buying businesses and you've still got to be clear on those businesses that you're buying, or if you've got a diversified portfolio, if you've got an index fund, over the long term you should do reasonably well. And that's the message I'm in, because there will be a vaccine for this virus. It's just a matter of when. And then we don't know whether the correction is going to be a V-shaped correction or whether it's going to be a W-shaped correction. But something's coming, you know. So I think because you're going to have stock build-up demand, you're going to have on the demand side, on the supply side, all of these things are going to bode well for a pretty good recovery when it happens, as soon as consumers and the general public get confidence. And they don't have confidence because there's still these unknowns.
There's a lot of massive unknowns.
Correct.
All right, so today we're going to talk about a framework that we think really is the overarching framework for all of the frameworks we've done in the last 5 years. So we're calling it the 7 grades of financial wellbeing. And the backstory is really simple, that at some point you want to self-assess where you are on the ladder of financial success. And so really what we're going to do is we're going to frame out where you could be, including a couple of grades, Ben, that you really want to avoid. And what they look like.
I mean, we're blessed in terms of helping people transform financially, Bryce. And you know, we've done thousands of consultations, we've got thousands and thousands of clients, and this is the diagnostics in terms of so what we want to try and do out of sharing this information today and giving these grades is to basically just see where you feel you sit. All right, now it's coming without judgment. So, you know, what's happened in the past has happened in the past. But we will be talking and critiquing behaviours and actions and mindsets as we go through this. So if you feel that that's judging you, well then maybe that is a mirror test for yourself, right? You cannot do this and you cannot move the dial on your behaviours, attitude and mindset unless you have an honest conversation with yourself. So some of this may be relevant to you. And that's the goal. Where the goal is, where do you reckon you sit? What grade are you in terms of as we measure out this financial wellbeing ladder?
So to give you a bit of context while we're talking about grading is if you think about the karate grading, Ben. I'm doing karate with my young boys at the moment. I'm a white belt. But there's clearly a lineup, and as you start the class, you go in order of white belts right through to the sensei is black, but in terms of our dojo, there's brown belts. So you can actually see where you want to go. You can see the behaviours that the people on the higher grades are actually doing.
Correct.
And there's a process that they actually go through. So kind of, if you use that as a paradigm for what we're about to talk to with this really cool framework that we're going to set out today, hopefully you can self-assess, get an idea. And so what we're going to do is we're going to sort of give you, within each grade, we're going to talk to you at headline level. We'll give you a bit of a backstory around what that particular grade looks like. We're going to talk to you about a bigger picture strategy within the grade, some of the feelings that you might experience within that, the behaviours that will send you up to the next grade, Ben, and equally the behaviours that will send you down to the lower grade, and then of course some action steps that you need to take to move to the next grade, and then also the milestone, Ben, that you go, well, once I've reached, that there's a certain thing, you go from a white belt to a yellow tip belt, and then you go from a yellow tip to a yellow. What are the milestones
moving up
that you
that
need
grade
to do to go up that grading?
So
let's kick it off.
We'll set the scene. So we're going for the hard one first, though, right? So a little bit more challenge here. So grade number 1 is financial turmoil. Now it's really important. So the headline here is you have or you're about to bottom out. So we don't ever want to see anyone in financial turmoil.
No.
And we're going to basically paint a picture through the backstory here in terms of what it looks like. And you should never start here. There are things that have happened to you over that journey that may have got you here. So let's talk through some of those backstory points here, Bryce.
Yeah, so as you said, it's not a starting point. Very, very few people start off here. They usually get here because of poor choices or decision making.
Yep.
Unless your parents actually got themselves here through poor choices or bad luck, Ben.
Yep. There are people who find themselves in this situation through ill health and have never been able to get on top of that. But what we're trying to point a picture here is if you're an income earner, then ultimately you've made some decisions around that money that should start you at grade 3, but we'll continue with this. So it's really important to understand that when you are here, we're looking at the behaviours and the backstory of people who have made some pretty poor decisions. So those poor choices, those decisions that they're making have been one where they have miscalculated, they've misjudged, they've basically have not understood what basic needs are versus discretionary spending. And in a sense, they've got total avoidance. They've abandoned their financial commitments and responsibilities. These people just have their head in the sand.
They've got conflict and challenge on every corner and heaps of stress. They cannot meet the basic needs on their own. If you're in this grade, Ben, your prospects of achieving any level of financial stability are low, they're remote, they're dire, because all wants and discretionary spending is not applicable or achievable. It's largely around bottoming out. It means that it is very dire, and it's usually caused by a tidal wave of debt where your commitments, your interests and your costs is far greater than you can generate in the short term. So, because then what happens is it becomes a compounding effect on the reverse. We talk about the compounding effect in the positive. Yeah. This becomes the compounding effect in the negative.
This is a debt disaster, right? I mean, ultimately what's happening here is you've got a situation where even the money that you are generating, the tidal wave of debt that you've got is basically far outstripping the money that's coming in the door. So you really never want to be here. No. And fortunately, there's only a very small percentage of people who end up here. They've usually taken action prior. But if you are relating to this, then you are in a world of financial hurt. Yeah. This is pain in the biggest way. And if we think about it from a big picture point of view, you've got here because you haven't taken action, you've had no strategy. Technically, you are insolvent. Right? If you were a business, you would have to bring in the administrators. It is an absolute debt disaster. And if your anxiety levels, in other words, if your state of wallet plays with your state of mind, then you're basically gasping for air. You're totally overwhelmed. It's just a really different position to be in.
Yeah, you absolutely need professional help to navigate these waters. It's very, 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 very difficult to do it on your own, Ben. So that is kind of describing financial turmoil. I'll just quickly flick up to 30,000 feet just to show people what the grades are. So grade 1 is financial turmoil. Yep. Grade 2 is the next step up, is financial survival. Grade 3 is financial consciousness, Ben. You talked about that being par. We're going to dive into that, but just keep that in the back of your mind. That's the par point.
Baseline.
Grade 4 is financial stability. Grade 5 is financial control. Grade 6 is financial peace. And grade 7 is financial contribution. So we're going to dive through all of those, folks. But as Ben said, financial turmoil is the point that very few start at, and every single one of us want to avoid at all costs.
Yeah, look, I mean, and if we think about the feelings, the descriptive words are despair, hopelessness, resignation. It actually will play in your state of mind. So depression, there will be a sense of worthlessness.
Yeah, your self-esteem will take a massive hit.
Massive hit. This is rock bottom. Yeah. Basically you are on the border or on one day away potentially being financially ruined. Yeah. So this is a really sensitive area in terms of what we're looking at here. So that is where you're at right now. So to get out of that, Bryce, what's the sort of behaviours that we want to be looking at?
Well, if you want to move up to the next grade, you definitely have to be thinking about, I cannot do this on my own.
Totally.
I absolutely need to talk to another human being so that they can actually see stuff that I can't see. They can help me navigate the waters that I do not know how to navigate. If you think about, as an analogy, you are out in an ocean and you're bobbing under more than you're keeping your mouth up.
Yep.
And so you need someone to come and throw you a life jacket, Ben.
Now that in our mindset and our view, professionally as a financial counsellor, they need to step in here. You need to reach out to them. You need to, the action steps are you're definitely going to have to negotiate with creditors. There's conversations potentially around bankruptcy. So again, it's all around negotiating what that looks like and hopefully trying to avoid that at all costs. Best case scenario, you'll be able to get some payment plans in place, and you'll agree to amount to pay your creditors, and you'll try your best to slowly climb out of that very, very difficult situation that you find yourself in.
But the worst case scenario, Ben, is you could become bankrupt and
Yep.
your credit history then becomes shot. So the next 5 to 7 years, there's no credit, including bills, utilities, mobile phones. Basically, you get shut off from the financial world, which
Yep.
is a very, very difficult place to be.
Really difficult place to be. We don't want to see anyone in this particular space, and why we're talking about these grades today is we hopefully will give you clues of actions and behaviours that you need to be taking, that you never find yourself in this particular situation, or that of your friends and family and loved ones. It's really important. So, Bryce, what are the milestones you need to do to move up?
Yeah, so that's the lineup where you think, how do I move to the next belt grade?
Yep.
The milestone is very simple. You've got third party has total control of your money,
Yep.
total control of the decisions, and they have a clear pathway to navigate you out of where you were at.
Yep.
Third party being the key.
Correct. And in this case, big shout out to the Financial Counselling Australia, so the FCA. They will be your first point of call. You can get onto their website, which is basically financialcounselingaustralia.org.au, and they will start you off in the general conversation. They will probably then lead you over to what we call the National Debt Helpline, and they will, at the National Debt Helpline, they will then find financial counsellors in your area, and you'll be able to sit down with them, have a meeting, and try and get some understanding of your situation. Because you're in total denial and you basically, you've tried to completely remove any sense of understanding of this stuff, there's going to have to be some action taken here.
So they're important, Ben, those resources. So you mentioned Financial Counselling Australia, .org.au. They have then 7 bodies, so it's the West Australian, the South Australian and the Northern Territory. So they'll refer you on to that. So it's a federated body that has those professional associations in each state and territory. So the National Debt Helpline, that's a not-for-profit that helps Australians tackle their debt problems. And they're professional financial counsellors that offer free, independent and confidential service. So importantly, they're not a lender, so they won't sell you anything or try and make money from you. They're there to get you out of the debt cycle you're in.
They are funded by the public or donations and those types of things to keep them along the line, so that's really important.
And then part of your mindset is clearly around self-esteem, self-worth, all those sorts of things. So Beyond Blue, they provide information to help people with their best possible mental health, whatever age.
Yeah. If you're feeling high anxiety, depression, negative thoughts, please reach out to Beyond Blue. They do some great work there in terms of trying to put things into context. This is only your financial livelihood. There is obviously bigger things than just your finances. We talk about that all the time. So please, if this is how you're feeling, reach out to Beyond Blue and get your health and mindset correct, and then start to embark on the journey of fixing up your finances.
And it's a good point you raised, Ben. It's not everything, but the amount of relationship breakdowns that come from having money struggles and arguments around money are enormous, which then lead on to health issues and mental health issues. So getting that stuff right. So what I do know is we do have people who listen to our podcast, Ben, who are not necessarily on the prosperity side.
Correct.
I've had people reach out to me and say, hey, listen, I'd love to be able to implement some of the stuff that you guys talk about, but let me tell you where I currently am.
Yeah.
And I'd probably more so in grade 2 from what I see than grade 1, because grade 1 probably don't have a lot of time to listen to podcasts.
You are bottomed out.
But if you know someone, or if we are actually speaking to you and you found yourself moving into this grade, we certainly encourage you to reach out to those bodies. They're designed there to help you, Ben.
Now, obviously, to get down to financial turmoil, you would have had to pass through grade 2, and that is financial survival. So hopefully if those people are experiencing financial hardship, this is as hard as you land. You don't get down any further than this. And so we talk about this headline as being, you are financially all over the shop and often your head is in the sand. Because it is such a burden on you as a person, you don't act rationally, Bryce. No. There's things that you do that just you wouldn't do in normal circumstances. So often, the backstory for us is you're not acknowledging the gravity of your situation.
It's a bit of denial, isn't it?
Yep. You're often, basically covering up the truth in terms of how, dire your situation may be.
But to build an analogy for this too, folks, just imagine there's a bucket and you've got 2 or 3 holes in it and so the water's running out, but as you try and patch those 2 or 3 holes, another one emerges and then another one emerges. So it's just you cannot plug the holes quick enough for the water that's coming out there. So you need to fix the problem upstream because your situation downstream is not looking so good, Ben.
Yeah, so the upstream solution here, what we're referring to there is just control your spending. Most people, if they're in this situation, have made, again, some poor choices and got themselves into this situation. So there's potentially some work that needs to be done around that. But because of your situation, you really have no ability to plan too far into the future because survival is your only goal.
You're not thinking about next week, Ben. You're not thinking about next month. You're thinking about today.
No, and so you obviously, if you're in this position, it's because you have financial commitments that you're not meeting.
You're scared of the phone ringing?
Yeah, we talk about this being, the start of the debt spiral. So it's really important to understand that. So, if you're doing things like going down to pawn shops and selling things to try and, keep the wolves from the door, the payday lenders, those types of things, then we really have a deeper problem that we need to be solving with you around what your situation is here. Now, you are going to go through some behaviours around getting angry, potentially there might be you blaming others for your situation, and you may not be taking responsibility. Again, we're not trying to judge that, but what we are saying is you've got to be critical on yourself in terms of why you're here, because if you continue to keep saying it's a third party reason why you're in this situation, you're going to have to own it at some point.
Mate, you mentioned you'll go through a range of emotions. You likely have an irrational mindset. So the irrational mindset and the behaviours that you're displaying, they're the norm. So they're so norm that you cannot even identify that they are not regular.
Correct.
That is your challenge. So, often you can put on a double agent or living a lie. So you put on a brave face, you walk out the front door, and this is how you present to the world. But behind closed doors, it's a very different picture. So quite often it can be a surprise to people close to you.
Correct.
Because you're living that double agent life.
Well, that's right. You're going out and you're shouting the bar, or you're doing what you're doing. You're in a round and you're not showing up that, this money is borrowed money. You really don't. You probably would have been better off to say, look, can't make this weekend. Can't make this event because, I'm busy or whatever it is, until you get yourself in order, because that continues this whole. Now I've started this program of myth truths and not being honest with myself, that I'm getting myself into that situation. So that's always dangerous.
But you are worried that your children, an emergency, teeth, get sick, all those sorts of things, you won't be able to pay the doctor. There is that constant fear of the phone ringing, the constant fear of the letterbox, the constant fear of your email sending another bill, that you won't be able to make your commitments. So effectively, what you're doing is you're robbing Peter over here and you're paying Paul over there, and that's why you can't think too far in the future, because all you are doing is duck shoveling things around to make sure that
you're applying for more credit. You're basically looking at credit limits. You're when you next
zero
pay
interest on the credit card, swap it over.
It's just a mess, unfortunately, guys. So you'll be asking for money, constantly borrowing money from friends and family. If you're in that situation, that's the light bulb for you, right? If you're juggling your credit around constantly, then there's, we'll get to the action steps, but you can see the picture that we're painting here in terms of that. Now, some people turn to gambling as a means to try and have a quick fix.
I wasn't wise enough at the time, Ben, but I did see a lot of people who come because I used to work at a casino over in Perth, and I used to see a lot of people come in and they'd be in there on a Saturday night, and then I'd start my shift on a Tuesday, and they'd have 3-day growth, and you could see that they'd spend a lot of time in the casino. Yeah. So that's a shame. You have no buffer, so basically there's no resources to call on.
No.
It's skin to the bone. So, and you usually underquote what you spend, or worse, have no idea.
Yeah. If you have no idea what you're spending, or you don't believe how much you spend, this is a clear sign that you aren't on top of your finances. And so you will, if you're not already in that debt spiral, then that is a clear indication. If you can just get a sense of what money comes in and what money goes out, that's going to be helpful for you. So big picture.
Well, the strategy around this is, number one, you need to take responsibility and fast.
Real clear.
Own the situation. What we talked about before is through the backstory is you're not taking responsibility. So it is yours. It is your responsibility. It's your fault. You need to straighten up very, very quickly because you need to own that situation. And again, you might need some third-party help.
Yeah, I think if you're overwhelmed, and a lot of people are at this stage, we still expect that you should use the resources of a financial counsellor. They would much prefer to see you here than at Financial Turmoil.
Yeah.
So we still think that don't be ashamed, don't be embarrassed. These people have seen it all before. And we have people coming in and meet with us and I'm really embarrassed. I spent $60,000 on the poker machines and I lost all that money for the family. It's like, it's okay, you're here now. And we're going to work on mindset and behaviours to change that, and we're going to rebuild. Okay, so you haven't lost the farm. Everything can be better, and just that reassurance of sitting down and talking to someone who can appreciate it and understand what you're going through is really, really helpful.
In terms of owning your situation, Ben, the best predictor of future behaviour is most recent relevant behaviour. So if your most recent relevant behaviour is the fact that you don't know what you're doing, therefore the future behaviour is likely to be the same. Nothing's going to change. So therefore seek and take, and I say take in capital letters, Ben, seek and take advice from external experts.
True. Now, I'm going to, again, we'll use some of the feeling words, the descriptive words. If they are resonating with you, then exactly what Bryce just said, that's seek and take advice sooner rather than later. So highly anxious, fear, unsettled, don't feel yourself, constantly on edge, can never relax, feeling fake or an imposter, overwhelmed, frustrated, there's lying going on, blaming of others, denial, anger, why me, a bit of self-pity. If all of those things or one or a couple of those things are showing up in how you're behaving and how you're feeling, that's a bit of a clue to sort of take action.
Now, Ben, for you to be in grade 2 and for you to slip down to grade 1, these are the behaviours that all the things running through your mind. It's resignation, it's too hard, it's insurmountable, and I'm giving up. If you're feeling those things, Ben, chances are you will slip from grade 2 to grade 1.
You'll be downgraded. That's exactly right.
But on the upside, if you want to move from grade 2 to grade 3, the feelings that you'll be having, Ben, is belief. You've actually got this sense of fight. You're going to do it or die. You're going to own it. And to get out of here, if it's to be, it's up to me.
Yeah, I mean, I love this. And I think the financial counsellor is going to be able to show you that there is life still left in you. That should give you that belief to take action and to fight it and to get through the other side. Because if you are bottoming out in financial survival and you can recover from that, there's a great story there. That'll give you a lot of self-confidence, self-worth, self-belief, and then that could take you to an unstoppable journey for you in the future.
So what is the action you need to take? All right, number one, you need to stop all spending except for the absolute basics, Ben, because you've got some work to do. You have to get back to spending less than you earn ASAP. I mean, that sounds like an hors d'oeuvre moment, but the amount of people who do not spend less than they earn is just crazy. So really the goal is to balance the books and understand the basics of your money in and your money out.
Yep. So there is a bit of tough love on yourself. You're going to have to make some smart judgment calls. You need to also come clean with trusted confidence.
That's important.
It really is important, right? I mean, to share this challenge with those people who care about you and want to see you successful, is really helpful in terms of knowing that there won't be judgment and that you can see them moving forward. I mean, that's a big part of changing behaviour in terms of what that looks like.
Because money is a taboo, so we understand that's hard to do, but that there is a very, very, very important step. We talked about the other one, the basics, spend less than you earn, understand money in, money out, but being able to have a community, even if it's just one other person that you can just sort of confide in.
What's the saying? A problem shared is a problem halved.
Yep.
So I think that's the message here in terms of identify those people who you do believe will not judge you, but will take you on that journey to try and see you get out the other side. That's really important.
And the final thing is just close off all access to any credit from your friends, from family, store cards, credit cards, lines of credit.
Cut them up, get rid of them.
Remove all the temptation is what we need to do. So Ben, there's a milestone to move from this grade to the next one.
There is life above this. So effectively, we want to move, to financially solvent. We want to get back in the black. We want to start saving money and building up a buffer.
An emergency fund.
An emergency fund, just a little bit of wriggle room that we need. That is the milestone to move to grade 3, which is financial consciousness.
Now folks, just in these two, grade 1 and grade 2 are the undesirable grades. So there could be an argument that people even in financial survival are below the poverty line. So 13% of our population are in this range. But folks, those resources that we talked about in grade 1 are equally applicable to people in financial survival.
Go and seek some help, people. Please go and seek some help.
Financial consciousness, grade 3, Ben. This is for the golfers. This is par.
This is baseline.
For the history buffs, this is ground zero. This is the point where we should all essentially be starting. So the headline here is you have bigger financial decisions on the horizon. So as the backstory for this grade, we should all start out at this grade. This is where we should be there for day one. Ideally, there'd be discussions in schools, in high schools, in university that show us how we can start at financial consciousness. So anyone earning income, this here, Ben, is ground zero.
Yeah, I mean, it ultimately, and this is where we do say accountability is going to be on you, because if you are earning money, the decisions you make with that money today and into the future will take you on your grading path upwards or your grading path downwards. So
we'll talk
obviously
about that.
Get a good education, get the best opportunities you can, hustle, do whatever you need to do. But when that money's coming in, this is about being educated around basic financial money management.
Quite often you're problem aware here that there is a need to understand how to better manage your money, be better stewards of your money, but quite often you're not quite aware of the solution.
Yeah, well, you don't know that there are some systems that you can undertake. So money management is just, it's entering your consciousness for the first time. How does it work? How does this whole money in, money out thing, how can it impact me in the short and long term? They're the sort of questions that are now starting to connect with you and you're starting to explore what they look like.
So you're shy and scared, perhaps even a little sceptical, because you may have some money beliefs that have been passed on to you from previous generations that caused that. But you're still conscious, you're aware that you have a problem that needs solving. You're essentially consciously incompetent.
In the politest way possible that we can share.
Kind of like when you first learn to drive a car, Ben, you're consciously aware that you don't know how to drive a car yet.
Yeah, that's right.
But you have a plan, you have a problem, and you're seeking out the solution. So this is kind of about an awakening. So you're open to ideas about improving your money management and, at some stage, potential investments. Yeah,
I think if you're going to move up that grade scale, you absolutely need to do. So there is a mountain to climb here. There's no doubt about it, and you're going to take one step at a time because you realise you're in a position now where you do need some help, some ideas, and the best part about that is that there's so much free content out there. There's really good advice.
In any way you like, Ben, if you're a listener,
Yep.
there's podcasts. If you're a watcher, there's YouTube. If you're a reader, there's blogs galore.
And books.
Every modality.
So there's really no excuse for you not to be able to be educated. And, there is some consciousness about money and basically how it moves in and moves out. So as you start to get educated around that, what's actually happening is you're now starting to keep a loose eye on it, but you can do much better. So you're like, okay, I get that. I need to make these baby steps forward.
It's a bit like when you're driving your car, Ben. When you're driving now, you can actually sense when you're doing 50 Ks or when you're doing 80 Ks or when you're doing 110 Ks. But when you first start driving the car, you can't sense that. You can't understand you're doing 50. It's a bit like that. You can be surprised about some of the slippage and where your ad hoc spending goes because you don't have true eyes on your money. You don't have enough cadence or rhythm or experience with this to understand those, intangibles of sense of where you are.
Yeah, you're aware, but you're not doing anything about that. So you don't have a money management system in place, that's pretty clear, but you're looking, you're exploring what that looks like. And at best, basic understanding of organising your finances and how you can accumulate. What normally happens for these people as they're exploring, they accumulate several bank accounts along the journey. Yeah. So that sort of says to me that you're conscious, but you're not taking any real actions about it. You should never have multiple bank accounts. That's just lazy money. It's money that could be housed in one central location, which then gives you a spotlight on what your money is. I don't know where it's. I've got some money here and I've got some money over. It's just, okay, well, you sound financially conscious, but you don't know where it's going, so we need to do something about it.
So you're definitely not money, on that. You're definitely not money fit.
No.
But you are willing to get off your butt
Yep.
and do some money fit exercise, Ben. You're willing to actually go and take a run around the block. So
yeah, you're going to be exploring peer assessments in terms of who you are and how you stack up against those peers. That is also about helping you change behaviours, and we've talked about money fit before in terms of what that means around changing those behaviours. So not going backwards, tracking forwards, but it's too slow. And so we use a reference here about, you've got a rudder, but the rudder's you're constantly tacking, so you could be making more progress quicker if you took action. So that's a bit of the backstory.
So the strategy here is you need to enter a rules-based money management system. So it's all about not getting ahead of yourselves. So you're not really investing just yet, but you're having an awareness around super and what type of funds you've got, where your money goes. So it's really the first taste of what lazy money versus active money will do. So it's a sense of, okay, if I actually get in control of this stuff, I might be able to trap some surplus, and then I've got a choice. You probably don't have an awareness at this point around the choice being, will it be on lifestyle or will it be on investing for the future? Because probably it's more about thinking, trap some surplus I could spend on lifestyle, but it's definitely having an awareness around you could have money making money for you. You've seen it, you've observed it.
That's right. You through your education, you're understanding the idea of compound. You're understanding that actually, if I put money aside, someone will pay interest on that money for me. Or if I have a small investment, I might be able to get dividends and returns on that money. So all of a sudden...
Usually around bank interest at this point, isn't
correct.
it? If I give the bank $100, they might give me 1% back.
It's not a big number these days, that's for sure. But you can get the sense that your money can work for you. Money does make money for you. So, what is a budget? Elements of, you're still making these questions and
how does it work?
Structuring it in your mind and all those types of things. So it's important that you're conscious, you're aware, but it's now trying to move to those better behaviours. And, the behaviour is what's going to be needed to do most work creating new habits around money management and checking on your money so you can start to see higher priority for you. So it's just going to become a thing for you. You're going to become aware of it and you want to do something about it.
Yeah, the behaviour is what's going to need the most work, but you're going to be totally oblivious to the fact that your behaviour is going to need the most work. So the sooner you can understand that, the better.
How are you feeling, Bryce?
Well, within this, you'd be feeling, tentatively optimistic. You'd be feeling, if you get it right, the money management, you'd be feeling organised. You'd be keen to sort of make the invisible visible, so you have some accountability around where your money's going. You'd certainly be hopeful, curious. Ideally, you'd be keen to learn more because you think, well, okay, I'm getting a taste for this. Here's some money in, some money out. There might be a better way. So by becoming financially aware, aspiration to move to another grade is really, really strong at this point. So again, because you haven't, if this is where you started and you haven't slipped back, you haven't gone from 1 to 3, Ben, you've started at 3, essentially you'll be thinking, well, if it's going to be, it's up to me.
So I think that's a great segue. So what makes you fall down? So a little bit of negative first. You don't follow through. So your behaviour here is, all right, well, I'm aware, but you don't follow, and your actions aren't aligned with your intentions. You don't confirm, you don't change those behaviours, you don't break bad behaviours or habits, and in some cases you can still get ahead of yourself. So you might be thinking, well, I'm good now, so I'll just do a bit more spending, or wait a minute, then you have to reel that in. So it's still challenging for you, and any impulse buying that you do, and you try and keep up with your peer group, and your audio doesn't match your intentions or your video is what we say, that's how you can go back a grade into that sort of financial survival mode. So we don't want to go there.
Yeah, the behaviours to move up the grade, Ben, is you're celebrating small wins, you're congratulating any mini milestones, which might mean, hey, listen, I've got surplus at the end of the month. You're getting momentum for the first time, so it actually feels like this works. Okay, I can see how this will work for the future. So you're seeing the change, and it's about putting those incremental habits in place. James Clear talked about that. This is a habit forming exercise, so that those habits become bigger habits, so that you can definitely trap more over time. Okay,
so we're at the baseline. How do we move up? What are the action steps to continue this momentum forward? Well, here's a big news story for you, Bryce. You cannot create wealth without organising and controlling your money and running money like a business through a system and a process.
Come on.
I'm telling you the truth, mate.
Sounds like you should make money simple again,
Telling
Ben.
you the truth. It's time to close off those lazy bank accounts.
Yep.
Start a process of evaluation and assessment of your wants and needs. This is the time you start to be critical with yourself about wants and needs, or as we refer to them, essential and discretionary. Really important. Transfer money into your primary account, and time for you to do your calculations of your money in, money out. So you know where this is.
Yep.
These are our gather, sort, calculate, set up your banking, correct?
Yeah. So stage 1 of planning, Ben, because it's getting your money in order. So essentially, you will have a money management system in place. Now, we've obviously talked about our simple system through that, but it could just be a simple ledger.
Correct.
So you know where it's coming in and out, but obviously the holy grail of that is. So for us, the milestone to move to grade 4, which is from financial consciousness at grade 3 to financial stability at grade 4, is very, very simple. You have a rules-based money management system in place.
Yep, really true. Now, obviously, again, quickly on the resources, reading, audio, video, whatever that looks like for you. That's going to be helpful in terms of being able to move to financial stability.
And Ben, we wholeheartedly believe in our system, so clearly the resource there is makemoneysimple.com.au. Go and get the book.
It's a free book.
But there are other alternatives. That's our solution for that.
Yep. Now, so financial stability is, there's a foundation building here. There's something going on.
Grade 4. This is a blue belt.
Yeah, you've got a plan, and now you've got a bit of cash in the bank. So it really is starting to think about the roadmap ahead, right? That plan is going to be important for you. So now at the moment you're curiously optimistic about the future because you've gained a level of understanding and education, and you can see that pathway forward. That is, this is where potential and opportunity have a home. Your confidence grows as you've done your bank balance and your wealth levels. You're starting to get a sense of that. Your mindset is now on realising possibility and potential.
Ooh, I like that. So I guess the decision making around your money is far better at this grade. The concept of wants versus needs, which we talked about in the previous grade, that's really clear to you now. So forward planning future spending becomes much, much clearer also.
Totally.
So the whole idea of financial goals is looking more of a reality than a pipe dream at this particular grade, Ben, because you're now taking an active interest versus a passive interest.
Yeah, you're following a pathway forward. This is really clear. Plan to become what you plan to become and basically take action. You've built in the safety margins So in your planning, you've built in safety margins, buffers, so you feel confident in the fact that if something does go wrong, you've got a little bit of wriggle room there again. And you've got a clear money management system that's trapping more surplus, and you've got your money deployed that's helping you money work harder for you to make you more money, Bryce.
Very good, Ben. So it's a good grade to be in, starting to see some progress. So the bigger picture or strategy here is, we talked previously about your problem aware.
Yep.
Now in this grade, you're now solution aware.
Love it.
You know what it takes to actually move forward. So you're now taking action and building good habits with your money. So you have a plan, you'll scrutinise more discretionary spending activities than you ever have before, Ben. You won't unconsciously overspend, as we like to say.
There it is.
And you'll get organised and develop a plan which includes personal and financial goals and targets, Ben.
Yeah, I mean, how does that make me feel?
Yeah.
Well, seriously, I'm very optimistic. It's excited.
Yeah.
I'm feeling
This is
it.
a good place to be.
Yeah, basically your confidence is rising. You believe in the process. Nothing better than believing in the process. All great coaches will tell you, do the work and believe in the process. There is delayed gratification is going to basically see itself materialise in the future.
Now, Ben, if you're in grade 4, the behaviours that will send you down a grade is a derailing sudden shock or panic, which reverts you back to your bad habits. So, for example, job loss or some unplanned event or a life event will take you out of rhythm, e.g. A friend may have been diagnosed with a really poor health outcome, Ben, cancer for example, and the thought of delayed gratification prompts the, well, what's this all for anyway? And it takes you off plan. You get jolted off plan.
Yeah, and we don't want that to happen, okay? So when you see that show up, you've got to be focused. You've got to stay the course. And so when you do, you're on your next way to grade 5, right? So the upside here is if you continue to keep executing, you're reviewing, using the frameworks to educate you to take action, you are implementing those frameworks, and you're feeling empowered, and you want to go to the next level. So you really are a believer now that this is working for you, and also you want to start working on your mindset and your personal development here too, because that's you're talking about the derailer. If you've got a strong mindset at this point in time, then the reality is you'll start to continue to be very optimistic and believe that you'll get out the other side successfully.
Nice. So action steps largely around your banking structure becomes lean and mean, Ben. You get rid of all those unnecessary bank accounts. You close them off that you've historically used for this and that. You set up your finances so that you manage them within a very short period of time. You don't micromanage everything, Ben.
Correct.
You get on with life, and hopefully, clearly, we think you could do that in 10 minutes a month so that you know where your financial position is at, Ben. You can do it at the drop of a hat. You know how to get access to the information quickly, and it doesn't all consume you because of the systems that you put in place. So you're now taking pride in the surplus that you're trapping, the debt that you are retiring off, the offset funds that you're building, and ideally the investments that you're considering, Ben.
Oh, here we go.
Starting to trap the surplus, not just for lifestyle. You may be considering that you're putting it into investments.
So, Bryce, moving from grade 4, which is financial stability, to grade 5, what's the milestones? Well, here, get your checklist here, everyone. Rules-based money management system in place, plus make sure you have a financial plan with clear personal and financial goals, aka big rocks in the jar.
Well unpacked, Ben.
If you would have, you're getting a sense of our global framework here across our entire podcast for the last 200 and something odd episodes.
So folks, grade 1 is financial turmoil, grade 2 is financial survival, grade 3 is financial consciousness, grade 4 is financial stability. Ben, you hinted what grade 5 is. It is financial control.
Oh, now I'm getting excited.
This is where you are on top of things and the future looks bright, so you turn your focus to wealth building, Ben.
Oh, away you go.
So this is all about lifestyle design. This is where you're starting to go, okay, if I'm actually getting on top of my surplus, I'm actually seeing a plan for the future, and I actually want to positively plan for that, you start to think, well, okay, well, if it's not just the 40-40-40 plan, 40 minutes at work for 40 hours for 40 years, you think, well, what lifestyle do I want to design? And that gives you confidence and control, because money is no longer a taboo at this point, because you've opened that up, you started to discuss it, at the very least with someone who's an expert, but ideally around the dinner table too, Ben.
You're going to attract people, Bryce, to you in terms of, what's your secret? What are you doing? Well, I've got a plan, I've done the work, I've educated myself, I know what I'm doing, I know the impacts of the money, like the car analogy you used before. I know that I'm driving at 60, I know that I'm driving around 80, I know that I'm... It just gives you that confidence in terms of what you need to do. So people are going to start leaning in, Bryce, and say, can you tell me the wins? What have you been doing? How have you been working? So that's going to help you. What shouldn't you do? What did I do wrong? What did I do right? You can start sharing those lessons, because now you're in control of your money. You know, the pieces of wealth building are now coming into place, the key priorities and making that money work harder for you. You're now starting to understand the power of money management embedded into basically creating wealth.
I like it.
So your level of money management sophistication is now what we call high. So it's time to build out that investment knowledge as part of that story.
Very good. So as we said before, it's the ideal lifestyle design phase. You're actively working out what that looks like. Your money management, Ben, is now running, this is a beautiful term, on autopilot. Your next level of education is all about wealth creation, not the basics. It's all about leverage and compound. As per the plan that you've put in place, the goal is to retire out all the non-deductible debt and then use OPM, Ben. Other people's money.
Bit of leverage.
Bit of leverage for investing. So money and investing, working hard, making more money for you.
Yeah, and if we give this context, I mean, the assumption here is, because you're probably sort of saying, at what life point do I do this? Well, for some people, this life point is in their late 20s. For other people, this life point or financial control is starting in their early 50s. So we didn't want to put a date stamp on this, did we, Bryce? We wanted to basically be in a position where you're sort of saying, well, what does this look like? But you could make assumptions that they might have a principal place of residence at this point in time. So that's they've gone and bought a property over that journey, and it's going to be different. Rent investors may be thinking, well, I don't need that. I'm going on a different path. So financial control, we don't want to pigeonhole you into, right, at this point in your life you should be doing this, at this point in your life you should be doing it. Hey, if your life is about getting more degrees and basically creating wealth with no debt, then that's possible as well. But the point being is that this is what financial control looks like.
Nice. So the steps, clearly having the money management on autopilot. And then the surplus that results from having money management on autopilot is being put to use. Because you are now investing, Ben.
Correct.
Money management investing.
And you don't have to be debt-free, guys. You can actually strip out some of that surplus money, knowing that you've got maybe the principal home mortgage covered, but you can also say, well, paying down the mortgage and having just basic superannuation ain't going to get me to where I want to be by retirement. So that's why you need to be doing that. So you're feeling safe. You're starting to feel great around what's basically happening. Payday is in sight. That retirement journey, where you're going to get to, you're in control, capable, confident, worthy, patience. The process is doing its thing. You're letting time do its thing. It's playing out as you'd hope. There might be some deviations and some roadblocks, but you're basically rinsing and repeating on all that works, and you're therefore I'm going and doing more, tweaking the plan, maximising my returns. That's basically all of those moving parts. You're effectively in complete rhythm and flow, and hitting those personal and financial milestones along the way, because it's not just about the post-retirement. There's also some big rocks in the jar that you wanted to get through that, and that's basically how you're feeling.
So Ben, the behaviours that would get you to go down on this, and we see it a lot, is your money beliefs. You say knowledge is empowering, but only if you act on it. At this level, it's knowledge is empowering, but only if you act on it, plus you have positive money beliefs. Because if knowledge is empowering, if you act on it and you have negative money beliefs, unfortunately you will derail.
Yeah.
So this is the behaviour that you need to work on around if you do not stay in the positive mindset and you do not start to think about some of the called invisible scripts or the subconscious beliefs that your parents, money is bad, or money is dirty, or money doesn't grow on trees, or money's hard to come by, or there's not much of it to go around. All these sorts of behaviours, all these sorts of thoughts will derail you within this grade if you don't actively try and work on them.
And the other big killer here, Bryce, is impatience. So we talked about this is where you're going to let time do its thing and the process work. If you get impatient and you don't understand the power of delayed gratification, then you can also derail yourself. Now, in terms of upgrading, so we're moving up. It's a combination of action and that delayed gratification. Be patient. It's going to come for you.
Very good, Ben. So the milestone to move from to grade 6, which is financial peace.
Here we go.
Hey, here we go, folks. These are the milestones. You have a rules-based money management system in place. Tick. You have a financial plan in place. Tick. And you have implementation of the financial plan in place, i.e. you have investments.
Investments.
Rules-based money management system plus a plan plus you have investments. They're the milestones to move from grade 5, which is financial control, Ben, to grade 6, which is financial peace.
Yeah, look, and the headline for us, it's pretty clear, total financial peace of mind. That's pretty much what financial peace looks like. Let's tell a bit of a backstory, Bryce.
You are in rare air, folks. You're no longer trading time for money. There are no money worries at all. You've achieved all your hopes and dreams that you planned for, Ben. There's freedom of choice.
Yes.
There's freedom of time. Your family's financial needs are completely sorted and the best opportunities are now present for all of your family moving forward.
Yes, you're realising your lifestyle design, Bryce. You're hitting those financial goals. Tick. You've got a real sense of accomplishment. That peace of mind is real, it's tangible, and you're achieving those hopes and dreams. It's a good place to be.
It's a great backstory. That's the goal for this podcast, is to get everyone into grade 6 and grade 7, which we'll talk about shortly. So the big picture here is you've essentially moved from that accumulation phase, that negative gearing, moving to a positive, retiring. So you're moving into that retirement phase. The sound money management is embedded in your DNA.
It is embedded. It's not even a second. It's just happening.
It's just done.
Just done. Not even a second thought.
You've achieved a level of financial sophistication. Your financial education and Ben, your knowledge and your action has actually paid off, and you've made some sacrifices along the way, but they feel well and truly worth it now.
In fact, Bryce, you're looking back and you say, you know what, they were worth it. Every step of the way, they were absolutely. I made those hard calls early, and that sacrifice makes it all worthwhile. So that delayed gratification is paying off in spades for you. So that's the big picture story. In terms of how you're feeling, Bryce?
Well, you're making money while you're asleep, Ben, is part of that strategy. So the feeling is you've got this sense of calm because you're in complete control. You've got abundance, Ben. Everything feels plentiful. You've got more than enough. As you said, that sense of self-worth and accomplishment comes from feeling proud. You've got that contentment. And you've played the long game, Ben, and you've won.
Oh, there's a winner right there. So how do I derail that? So here's where some people can
Here's the behaviours,
themselves.
Ben.
Here we go. Greed. Right? They get greedy, they get impatient, and they think they're too good, and they can get it all done. So they take
lose sight of the bigger picture.
Risks. Yeah. They potentially have a little bit of envy. Then it all becomes a bit of a competition around comparison. So they lose sight of that bigger picture of freedom, core values. And they're off balance, right? They lose sight of purpose.
Yeah.
And so they make poor decisions which can basically move them away from financial peace and back into, they're going to have to scramble to get back in control. So that's the big derailer for the behaviour down. One for up.
On the way up is it's a greater sense of calling or purpose beyond yourself, Ben, and even beyond your own family.
Yep.
You've provided for your core unit, so then it starts to become excessive generosity.
Yeah, I love it.
Looking out for others.
So how do we get there? How do we get to, what are the action steps to go to the top of the pinnacle? These are it. So basically asset and wealth preservation, tidy ups. So now that you've got financial peace, we want to de-risk the portfolio. We want to make sure that we're reducing that risk exposure, and we're just generating this passive income and capital growth that's coming off the assets and the investments that we've made. We've done the execution week to week, month to month, year to year, and it's basically setting up that autopilot thing going forward. It's time to reach it's time to teach the immediate family the knowledge you've gained and to build on the legacy that you have created. A really important point. So this is where legacy piece comes in. Now, you think legacy early on, but this is where it's starting to become true in terms of what that looks like.
So Ben, really, the final step here is this will be unique for a lot of people.
Here we go.
Just enjoy the lifestyle that you've designed and strategically delivered on.
Yeah. So all of those things that you wanted to do in retirement, whether it's the travel the world, play the best golf courses.
What's your rich life? Your rich life might be taking the kids to school. You might be going overseas.
Hit that bucket list.
You might be starting charities. Just knock it out of the park. So the milestones to move from grade 6, which is financial peace, Ben, to grade 7, which is the Pinnacle.
Here we go.
Which is financial contribution. Here we go, folks. Money smart's in place. I've taken a liberty there, Ben, at that point. You could have a rules-based money management system.
No, I like the little subtle.
You've got money smarts in place. You have a financial plan. You have your investments. And time has done the work. Compound has done the work.
Heavy lifting for you.
This gets you into grade 7. So, Ben, let's recap. Grade 1 was financial turmoil. You moved to grade 2, which is financial survival. Hopefully you've started at grade 3, which is financial consciousness, Ben, without slipping back. Grade 4 is financial stability.
Yes.
Grade 5, financial control.
Love it.
Grade 6 is financial peace. Ben, take us home with grade 7, financial contribution.
Financial contribution. You realise, Bryce, your calling is for contribution. The call now is to
serve others.
So it's beautiful. It's a beautiful place to be. So the backstory is it's time to pay it forward. Philanthropy, everything I need and more. You've basically got so much financial wealth that your generosity in giving is now your main calling. This is where you want to look after others. So charities, foundations, education funds, family trusts to make sure that the next generation of your family is protected. You disclose your journey, so you're now also telling people how you got here. You share that pathway, you share your success. Those types of things are all important. You think in abundance, Bryce. Open in your giving of time and money. You realise the call is to contribution, and you finally realise that true fulfilment in life is through humanity and being part of that human spirit.
Leaving a legacy, Ben. So the bigger picture strategy here is essentially your time and sort of time rich and financially free.
You are.
So your community impact can be realised.
Yep.
Pet projects, dreams to help come true for others. So a lasting contribution is what drives you. It's moving the dial for many.
Yeah.
So the level of wealth you have built will determine the size of the community you serve at either the local, state, national, or if you're a significant financial contributor, Ben, it'll be at a global level.
Yeah, I mean, we know who, the likes of the Warren Buffetts, the Bill Gates of the world are doing that on a global level. But yeah, this can happen.
Even Tony Robbins. I saw Tony Robbins recently. I'm seeing him at the end of the year. I was sitting there the whole time thinking, you've been doing this for a long time. What is actually driving you? And then I see that there's a charity that he's helping take young kids out of sex slavery, and he's also wanting to feed 10 million people, right? I'm thinking, wow. Yeah. That is a bigger financial contribution.
So how am I feeling, Bryce, at this point in time? I mean, seriously, I'm energetic, right? Because I've probably got that next phase of purpose. So I'm energetic, I'm rejuvenated, I'm ready to make an impact. I've got a true sense of that purpose and meaning. I'm grateful, I've got gratitude. In some cases, some folk, this is obviously very rare air, right? We're talking about a very small percentage, believe that this is their true happiness. And if you interview them, they'll say that this is probably the best work they've ever done. It's finding that enlightenment. They're really happy and open in terms of sharing the spoils of the hard work and the good decision making that they did to get them to this position.
Now, Ben, how do people move from the Pinnacle, grade 7, financial contribution? How do they go down a grade, Ben?
Yeah, well, I think where They're drinking their own Kool-Aid at this point. That's their biggest danger.
They are drunk on power and control.
They are. So they basically see themselves, potentially they can get ahead of themselves and see themselves above everyone else. They lose a sense of self in the sense that their self-importance clouds their judgment. So they can fall from grace very quickly if they don't remain on purpose and they don't get their own boots too full humility. In terms of they've got to remain humble. I think that's a lovely way to put it, Bryce.
So the action steps are it's pretty cool at this point, Ben. Yep. You're starting and contributing to charities. There's foundations. There's philanthropic contributions. Your ideas, your thought leadership, your input is valued at many, many levels. It's also admired.
Yep.
And there's a level of sophistication that comes with that. If you're in a family office, you might be creating legacies for future generations. So it is a huge legacy piece at this point.
Yeah, it is. And I think that's a nice way to close it off, right? I mean, to get to financial contribution should be anyone who's feeling that they want to make an impact, and I'm a big believer in aspiration, Bryce. Mm-hmm. You know, I'm a big believer if it is to be, it's up to me. What I love about this framework is about bringing it all together to sort of say, where are you? Where are you on this grade? Where are you sitting, and how can we get you to that next level? So that's what the podcast is about for you and I, in terms of how we develop that to get you there. But now you've got a grading system. Now you've got something.
This is your yellow brick road, Ben.
This
is the road to Oz. How do you want to get to financial contribution if that's what you desire?
Yep.
Some people might be happy at financial peace, Ben.
Yep.
Some people might be happy at financial stability. So at least you know what your road to Oz is and how that. So the way we want you to see this, folks, is this is the context that overarches the last 5 years of podcast.
Yep.
Because all of the frameworks that we've been putting together are essentially the branches of each of the tree, but this is the overarching framework that we are aspiring to help all of our community achieve through.
And in honest truth, Bryce, when we sit down with our clients too, we're doing this diagnostics.
Yep.
So we're clarifying and evaluating where they sit. We're trying to get a sense of how competent they are at money management, what their mindset looks like, what their potential and opportunity looks like, and then we build a plan around their goals and, you know, the big rocks in the jar. So this is a framework that's actually built, and all of the commentary that we have in here and all of our views and opinions around what it looks like is born out of real, actual, in the market understanding of what people do, how they behave, how they act, and how we can move the dial on getting them to that next level.
Now, Ben, the wonderful Stig will turn this into a PDF. Just hang tight. It might not be on today's episode, but it will certainly be available. So what we're going to do is, if you go to thepropertycouch.com.au and just opt in to receive the free copy of the book there, Ben.
Yep.
What it'll mean is then we will send you an email in the next couple of weeks.
Love it.
With the framework all fully fleshed out. We'll have the actual the steps. You'll be able to see it in a bigger model. We'll show you those frameworks, so make sure you do that.
Put some flair on our fundamentals.
She will. She'll certainly do that, but I'd certainly give her a coroner if you said it was going to be available at the end of this podcast, Ben, but within the next couple of weeks. You even heard her laughing in the background. All right, mate, so my life hack today is, have you read The 4 Hour Workweek by Tim Ferriss?
I do. I do.
Well, mate, I didn't ask you to marry me, but if you do, that's fine.
Yeah, yes, I have.
So he introduced this concept that I have since implemented. It's called the low information diet. It's around how you consume the news. So basically it says, this is a direct quote from the book.
Love it.
I hope you're sitting down. Take that sandwich out of your mouth so you don't choke. Cover the baby's ears. I'm going to tell you something that upsets a lot of people. I never watch the news, and I've bought one single newspaper in the last 5 years in Stansted Airport in London, only because it gave me a discount on Diet Pepsi. I would claim to be Amish, but last time I checked, Pepsi wasn't on the menu. So that was a foreign concept to me at the time, Ben, when I read that, the idea of having this low information. And since then, I don't watch the news. Mm-hmm. If I do watch the news sporadically, so I know that sounds like an oxymoron, I don't watch the news, but then if I do, I do watch the ABC news, so that'll be right up your alley there.
Yep.
But essentially, I do not consume daily news. And what it actually caused me to reflect on was I grew up in a household that got their worldview from the news. We had the over in Perth, it was the Channel 7 news was the highest rating, not the Channel 9.
Yep.
And also would switch over to current affair. And so those negative vibes were going through. And I realised that I have a natural bias towards negative, right? And I see that as coming from a childhood that had exposure to the news. Yep. So I like to consider myself an optimistic, but if under test, I will default to negative, so therefore I have to overcome and become the positive. So I've implemented that in my life and it's worked. So the reason I'm saying that, Ben, is I can't remember where I found this, but I've got this quote: the level of anxiety you have can be directly tied to the number of hours a day you spend watching the news. And so why should you stop consuming the news, Ben? One, it's depressing. Mostly the news is about war, racial conflict and destruction. Yep. Number two, you can't do anything about it. 99% of the news is unactionable unless it's time for an election, Ben, and you should probably pay attention to a debate or two. And it also fills your head. The best ideas and the best wisdom and the most compassionate responses come from a mostly empty mind, where you've created some space to do what you love to say, the slow thinking, Ben. So I have since implemented that, and I don't do it on a daily basis. I do listen to money-related news, Ben, which, because quite often the source that I have has some very influential thinkers, some very strategic thinkers, some very slow thinkers, and I get value out of that. But folks, my life hack today is consider eliminating consuming daily news. And the reason I'm saying that is if anything major is going down, I won't miss it. Someone will tell me, Ben, because I am very aware of the coronavirus, despite the fact that I'm not listening daily to the negative headlines. I also go and get my lunch up on Errol Street here in North Melbourne, Ben, and there is a newspaper that sits on the table most days whilst I'm waiting. So I get to see the headlines. And so if there's anything major or massive, I don't miss it. And equally, Ben, I'm surrounded by people. I am not a hermit. I am not someone who has isolated myself from other human contact. If anything major is going down, you and I will talk about it. Correct. So folks, my life hack today is consider eliminating daily consumption. Can I add? I would love you to do that.
So in Outlook, I don't know whether I've shared this before. I think I've shared it around the office. I get a lot of emails, Bryce.
You do? I don't know how you manage your inbox. It'd be 250 a day. And so what I've done, and I've started this back in August of last year to try and, because I have to do a lot of reading. I have to be across a fair bit of stuff, or I choose to. I don't have to, I choose to. Well, straightened up then.
Straighten that up for myself.
Yeah, well done.
So now when I see a new email coming in, I see if the content is what I'm looking for. If it is, I'll just auto send that to a folder. And so I have auto send folders for news investment, news mortgage broking, news taxation. And so it all just goes into these auto folders. And then I batch. So if there's something that's coming up and I'm hearing, I need to understand what's going on, I'll do that. But like what you were saying before, Factfulness is an excellent book to get you back up to 30,000 feet in terms of, you know what? The world's moving in a pretty good direction. As much as we get horror stories on a daily basis, when we think about it more broadly, we're actually getting more educated, we're lifting people out of poverty and all that. So I get great comfort in the fact that the world's in a reasonably good shape for those type of things. But that's what I've done. I've just tried to auto send, because if it's in my inbox, I've got to look at it. And even if it's a minute or two, it takes too long. So I've also noticed that some dailies that I was reading to try and get a snapshot on them was just taking up 15, 20 minutes of my time, which 15, 20 minutes that I don't have. So that's how I've also been a little bit more productive.
Can I give you a life hack then?
Yeah, do that.
Create separate email addresses for different purposes. So I have an Empower Wealth email address, which is just for Empower Business. And I guard this fastidiously. Oh, I can't even think. Fastidiously.
Fastidiously. There we go.
So no one can get into my Empower Wealth email lightly, right? So because then I have a home economics account. It's a Gmail account where bills and all that sort of stuff from my home line. And then I have a subscription email address, Ben.
For all of the things that you're trialling for the first time.
Because then it becomes a swipe file, right? Because as you know, in my email, I clear inbox 0 every day, usually twice a day. And I have two folders. I have inbox and archive. That is it. Because the search functions on email software are so great now. It's very rare that I'll lose an email, Ben. And so the same way that you just described in the batching,
you batch it.
I've effectively separated it, because I've seen your inbox and it gives me heart palpitations.
It doesn't bother me. Yeah.
So there you go, folks. There was a couple of life hacks, but consider eliminating the daily consumption of news. Coronavirus is a serious health challenge that should not be ignored, Ben. But if you were to have a daily consumption of the news, you would feel exceptionally depressed.
The problem with it is, Bryce, and I keep coming back to it, is it's sensationalist news, right? There's sound bites. You're seeing people falling over in the streets. You're seeing hospitals inundated. That's not the full story. There's thousands of people in their homes going about their day-to-day chores with coronavirus.
And and one stat that's not being reported is the people that have got it and are now on the other side of it.
Yeah.
Which is in the multiple thousands.
Well, I think
significant scores of thousands.
60,000 people I saw last night that are out the other side of it, right? So that's the problem, right? They only have a limited amount of people and attention span, so they go with if it bleeds, it leads, and it drives me mad. So I think media has a role to play in telling that story.
Hey, Ben.
Bryce, did you know? Well, I thought we got a nice little stat from the Financial Counselling of Australia website. So I thought I'd just share this because coming back to our financial wellbeing gradings, I think it's really important around does financial counselling work? So they've done the stats, and this is what they have for these people that they're helping get out of trouble. 74% avoid legal action.
Great.
That's great. 69% are more positive about the future. 66% resolve their financial difficulties. That's cool.
That is really
Two-thirds. 63% improve their mental well-being.
Very important.
That's helpful. 53% avoid bankruptcy. That's cool. And 45% improve their physical health. So your health is your wealth, but if you do have an unhealthy financial position, this will help you. So please, for those people who are finding it challenging and overwhelming to manage money, go and talk to a financial counsellor.
Yes.
And get some perspective.
Well said, Ben. That's 63% improving their mental well-being is so good to hear, because money's simple, Ben. Behaviour is hard. So if your well-being is down, that it's the downstream of behaviour of being flat and not being optimistic about the world really self-perpetuates being in that grade. So very good stats, Ben. Hopefully that's helped, folks. We are excited about the framework that we've just presented to you today. We're excited about the opportunities for you to self-assess where you might be, and we're excited about being on the journey for you. That was the culmination of 5 years of this podcast, bringing together all the frameworks that have this as the context. So we would love your feedback. So if you want to shout out to us on socials, let us know what you think within those grades. Let us know where you think you are within those grades, and we will use that as a context for the next 5 years of the Property Couch on how we will continue to bring you frameworks that allow you to make decisions easier, more simply, with a specific goal in mind so that you can achieve. Let's hope that you guys get to financial contribution, because that would be awesome. But at the very, very least, we get you to grade 6, which is financial peace. So Ben, until next week.
Knowledge is empowering, Bryce, but only if you act on it.
Okay, folks, see you next week. Hey there, folks, Bryce Holdaway here. Before you go, if you're new to our community and only listened to maybe a handful of episodes, I thoroughly recommend that you go all the way back to episode number 1, where we unpack all of the foundations when it comes to property investing. Now, for those of you that might be a little bit time poor, I've got good news for you. We have a binge guide that you can download straight away, which summarises the first 20 episodes where Ben and I unpack the foundational pillars of the A, B, C, D, and so much more. And you can get that straight away. If you go to thepropertycouch.com.au/TPC20, you can download it and consume it whenever you want. It's completely free and available now. And for those of you, just a quick reminder that nothing we've spoken about today constitutes financial advice. We recommend that you reach out to your licensed professional advisor so that you can look at your unique circumstances before acting on any information. Now don't forget, go to thepropertycouch.com.au/TPC20 and get your binge guide today.